On November 21st, the United States imposed sanctions on Russia's financial sector, which analysts consider among the most impactful since the start of Russia's full-scale invasion of Ukraine. The sanctions target numerous officials, financial institutions, and approximately 50 international banks operating in Russia, including Gazprombank. Clients from Turkey, Hungary, and the UI have already announced the discontinuation of services for Gazprombank cards.
This sweeping action will make it harder for the Kremlin to evade US sanctions and fund and equip its military. We will continue to take decisive steps against any financial channels Russia uses to support its illegal and unprovoked war in Ukraine. Janet Yellen, United States Secretary of the Treasury, on the department's website.
Experts note that Gazprombank was one of the few channels through which Russia continued to assess foreign currency. Sanctions against it will likely exacerbate the ruble's depreciation.
These sanctions will worsen the exchange rate for the ruble. Additionally, affected banks will face severe financial issues, forcing Russia's central bank to refinance them, which will further destabilize the ruble.
The Russian financial market is already reeling. The ruble has plugged to its lowest value since March 2022, with the central bank setting the exchange rate at 102 rubles per dollar. Another factor contributing to the ruble's decline is Russia's recent use of the experimental ballistic missile Oreshnik against Ukraine.
Exchange rates are influenced not only by economic and trade factors but also by politics and even war. Why? Because of the theory of rational expectations, which means that exchange rates are shaped by the expectations of people, businesses and governments. The strike on the peaceful city of Dnipro involving the so-called Oreshnik weapon is widely regarded by the international community, including the business sector, as a grave mistake. It is expected to lead to diplomatic losses for Russia and, in the longer term, potentially military setbacks and new sanctions.
The ruble traded between 85–95 per dollar in early 2024, but began a slow decline in August, coinciding with Ukrainian military operations in Russia's Kursk region. Analysts note that the Kremlin has few tools left to stabilize the currency, and any efforts will reflect the border state of Russia's economy.
The exchange rate is influenced by both the government and the central bank, which exerts a more or less professional impact. Additionally, there is administrative interference. Large buyers or sellers of foreign currency often have overseers who adjust how much currency to buy or sell. This kind of intervention distorts the exchange rate, but only temporarily. Ultimately, what matters for the economy is the fundamental trend, and that cannot be halted through administrative measures. The fundamental trend is clear: the decline of the Russian currency is inevitable and will continue.
Since July 12th, sanctions have further restricted Russia's financial operations. The Moscow Exchange and National Settlement Depository have ceased transactions in dollars and euros. The central bank now calculates exchange rates based on over-the-counter data, making the figures less transparent and more volatile. Reported by Bastun Katerina, Andriy Dmitrenko, UATV News.